Well, hello everyone. I'd like to thank you for joining me, Steve Reisner, for a look at the week ahead for the 1st to the 5th of February 2021. All right. A strange and exciting week last week, and we're probably in for a little bit more excitement coming ahead. Let's go over that. For those who don't know me yet, I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business, an active trader since '98, and a full-time trader since 2009. I'm a technical trader, but I do use some limited fundamentals, and we're actually going to give an example of that today. I moderate for H&R candlesticks from time to time, and I do provide one-on-one mentoring, and I'll cover that at the end of the presentation. Stick around to the end. I'm going to have a couple of special offers for you. It'll be well worth your time and money. Agenda, we're going to go over the lesson of the week. First, we do not have the economic calendar from Econo Day. The other calendars are not really conducive to doing a presentation, so I'm going to skip that for the moment. Earnings calendar, market overview. I'm going to do a rough, review of the trade ideas from last week, and then go over this week, and then the special offers. And last week, I'm just going to pat myself on the back a little bit and give you an idea of how well we've been doing for the last few weeks. All right, the lesson of the week is getting caught in the short squeeze. Everybody's probably heard about AMC and GameStop this week, but I want to give you an idea of this is not an unusual phenomenon. At least it isn't in my parlance. Institutional investment firms, a lot of those are the guys who get the big shorts on. That's how we get up to 20, 30, and 50% of a stock short. However, they do use risk management software that will force them to cover their positions at some point. The management says we're at risk when they have basically unlimited risk to the upside, and when the rallies get going, they just have to bite the bullet and take the loss. If a stock has high short interest relative to the float, that's the supply. Float is the number of shares that are outstanding in the marketplace, not the ones that are authorized. Some of those will be actually not distributed to the public. So it's really the ones that are actually trading out there. If that stock rallies, there's a demand, short sellers, as we pointed above, might be forced to cover their position by purchasing the stock regardless of the price and regardless of what they think it's going to do in the future. They just can't hang around on a short forever. Short squeeze, and then not only for themselves, but the broker, like even a retail trader like us, it'll be made for us. Short squeeze occurs when the short sellers are scrambling to replace their borrowed stock. This increases the demand over what it would normally be. It decreases the supply because people are going to hang on to it, and it forces prices up. Earnings is just one example of a catalyst that I use and have been using most of the time. They at Investopedia said it's nearly impossible to predict a short squeeze. I think from the GameStop and AMC perspectives, yes, that's probably true. However, by looking at that and looking at earnings, we can probably do a pretty good job, and I pride myself in trading earnings on surprises that go against the shorts, and it actually basically adds fuel to the fire to longs that I do. So I've been doing this for years, and it works. I've just noticed that it worked really well last week. Short squeeze setup is when you have relatively high short interest to the float as a percentage. I normally use approximately 8 to 10% or more. We've had some stocks that kind of snuck up on me, 25, 35, 50% of the stock. That's a ridiculous amount. There's probably no way that those will continue to go down unless they're going to go bankrupt. And that's kind of what these, from a fundamental perspective, things like AMC and GameStop, they're trashy companies. You know, they're bleeding money all over the place. But 50%, that's a ridiculous amount. That means you're basically have a 50-50 chance of it going lower. In fact, it's probably less. Now, how to find them, I use finviz.com or shortsqueeze.com. And some recent examples we're going to go over in just a second. AMC, GameStop, Macy's, Novavax, ODT, Planeteer, Plug, Run was a couple of 3 weeks ago, and I was in on that one on the upside. Shack and SKT. Well, let's go and zoom on over here to recent examples. We have short squeeze examples. Okay. Let's go over here. AMC. 44% of the float is short. A lot of people are betting that it's going to go bankrupt. And I think they're going to have tough times. They're going to have to reinvent themselves. They're probably not going to see the heyday of people going to the theater as they used to. But 44% is a lot, and the Reddit people chose this as one to go after. And sure enough, what happened here is, in just a couple of days, this puppy went up 382%. Yikes. I mean, it went from, $3 to $20. GameStop, that's the one that's got all the history. 122% of the float was short back over here. I mean, that's a ridiculous amount. Can't possibly be that, I don't believe. How could you borrow something that doesn't exist? But anyway, you went up over 2,000% from, what is here, right? $24 to over $400, $500. This shows that regardless of the price, people who are short have got to cover. They cannot stay short forever because they have unlimited liability. Macy's had 30% of the float short. Well, this didn't go up much, Well, I pointed Macy out last week at about $14, and if you got out near the high, you could have gotten out with about 50% or so. But I had a target of this $16 to $17 area, and that's a little not so shabby 30%. Novavax. Novavax is one that's probably still got some legs. I have been shorting Novavax at this in this potential pop out of the box consolidation for quite some time. I noticed it the end of December, and I've been following it every week. If you want to go back, I've got videos of it. And I actually had this as my upper limit, and sure enough, it popped out on Friday. On Friday, we went up and closed up 66%. Yikes. Well, this one probably has some legs to the upside. Let's go ahead and look at the area chart. We're at all-time highs here. It's a biotech. Biotechs have been hot. This is probably one of the few areas that is still working out there. So Novavax with news, pop it on top of this, at 11% short. Let's go on over here. Let me find out what Novavax. I'm trying to remember what the story was with Novavax. Anyway, it's really the short squeezes going on. Here they were trying to talk about Novavax producing 150 million vaccine doses a week. They noticed they sent that out late on the 29th, and that's where we get the big pop. So this one's probably got some legs. It's got some fundamentals behind it, and this is where I said I use fundamentals along with the technicals. The technical was the setup here. And let's go back and look at the area chart with 180. Yep, right in here, 170-ish. All right, that's what we were doing. And then ODT. ODT I had marked up as a possible retest of this 22.5, or sorry, 22.25 level. Well, we actually hit that one, and then we went up to the prior one. If I go here to a weekly, it basically is the top of this area. Not a surprise that we pulled back. So I hit 2 of my 3 targets just last week. Um, Palantir, fairly new. I think it's called a SPAC, and there was a special purpose acquisition company back until about November, and they bought out Palantir and took over its name. And we did the consolidation here. We have only about 9% of the float short. We broke out. You could have brought it at 28. You could have waited for the move over 32 and moved up. Oh gosh, the conservative move was 23%. Another move could have been upwards of 40 to 46%. Plug Power. Again, it did the short squeeze, 16% of the float back over here at the same time as the solars. All the solars are running. Whoops. Yeah, get back there, baby. Okay. And don't do that. I'm talking to my machine here. 114%. I missed this one. It went up over $37, and I got in on the next one, Solar Power Run. My target I was looking for was about the $80, $75 to $80 level. It sure enough made that one on the gap up and the move up over $71, $72. And I bailed out too early. I made about 20% in there, and it went up a little higher. I will want to point out that a lot of these could be described as musical chair stocks. The short squeeze happens fast and furious, but you do not want to be the last one holding the bag, because most of these have really, really terrible fundamentals. Plug and Run and whatever probably don't have terrible fundamentals necessarily, but they don't have the fundamentals that are going to cause them to go up 50 to 100%. Okay, so notice how you get a massive drop after the run, so to speak. Haha. Shake Shack. Boom. When it broke up over about the 91.5, you knew it was going to run to 100, but it ran up into the 25-30% level. Then it got another spurt back up here when the shorts started to go after it this week. I don't know whether this is going to have any more legs or not, but I would be very cautious about that, because as it is, we're sitting right now on the close, we're up 32% in about, 1 month, 4 weeks? It's going to take a while to digest that kind of move. The last one of our examples here is SKT. SKT did its real breakout here over about 11:30 a couple of weeks ago, and I did point out that the retailers were doing quite well. Well, this puppy, last week I put it out as a possible long, and 52% of the short running to $19, 40% on the move. Could have easily gotten in there with 6.8 million shares. You could have easily gotten in on an option and gotten a lot more than these percentages that I'm talking about up here. So if somebody had GameStop that was up over 1,000%, if you used options, you'd have very little money at risk, and you could have multiplied yours by at least 10 to maybe 100 times. All right, let's go back to the presentation. All right, so this is something that I would only do with risk money. I think right now, one of the things that I would caution people is don't get caught up in the hype. There are going to people that are going to go out there and buy GameStop and AMC right now, Monday morning, because they've heard so much about it over the weekend, and they're going to buy some stock, and they're probably going to be caught holding the bag. They are going to lose everything that they put into those stocks, because the game is over for these. Well, yeah, I could continue to bounce around up there and be volatile. My heart could not take it. But let's go find the next one. These are going to probably be around for a while. Now that they've discovered that they can run the big boys out of town, let's just... I'm going to play it like I've normally done, is that when I see something break a technical pattern like we did with... SKT, like we did with Novavax. When those break, this thing knew, I've got fundamentals behind it as well. So those are what I'm going to play. Earnings. I'm going to play the earnings. Okay. Economic reports are not available at this time. Here are a number of the stocks that are reporting this week for earnings. I'm not going to go over all of them, but just be advised before you get into any trade, make sure you know when earnings is. And if you don't do it before don't let the market close on you before checking it out. You may want to just exit stage right. All right, let's go over the market overview. We do have a couple of hot sectors at the moment. DBA, the ETF, these are all ETFs, silver, SIL and SLV, XBI, and XRT, the retail and biotech. Those are the only ones that are hot. I had about 10 or so listed the last 2 weeks, but it's really come down to very, very slim pickings now. All right, let's go over to all right, markets. Let's go to 6 months. I don't think I can actually see anything on a 6-month chart here. Oil, we've been in rally mode since November. Since the election, we're now back up to the 50s, so we're kind of back into the normal range for oil. It's a good thing, actually, to be in the 40s to 50s to 60s, not down at the teens. Gold's dropped off dramatically since our August time frame. Just kind of struggling for direction at the moment. Let's go look at the S&P 500. We had a monster sell-off on Wednesday. Excuse me, a poor attempt at a rally on Thursday, and then coming back to the 3680 level, which I had pointed out a couple of weeks ago as one of the two levels of major support, 3680, and the other one's down here near the 200. I'll get really, really disappointed if we go back there. Hopefully we'll play around with this 50, and I'll show you right now why I think we're going to bounce. Not only are we at 3680, but let's go to the longs and let's look at okay, here we go. T2122, go to lines. We're in the bounce zone. I watched this T2122. When we get anywhere between this 7.5 to 20, we're probably going to bounce. Within a day or two, we will bounce. And I've been watching this for almost 20 years. And it hardly fails me. I mean, it's maybe off by a day or two, but it never really doesn't work. Because you can't stay that oversold forever. As we can stay a little bit towards the overbought, but not forever. You see what we did here for all of November, December, and most of January. But now we're paying the price. And we're pulling back. And this is a healthy thing. How big is this bounce going to be? How long it's going to last? I have no clue. I really don't. I am going to point out one more thing that is really kind of a lesson learned. It was going to be my lesson learned before we got into the GME. Let's go look and see what on 3M, what happened back here. Let's see on the weekly, 725.19. Okay, I think it actually was on the daily. Let's see, 725.19. Okay, you see how this big bar right here, that spike up, it was on huge, massive volume. And that spike was looking to get retested. It was going to get retested at some point. Did I know when it was going to happen? No. But you see, if people get myopic and they start looking in here and going, oh yeah, it's going to rally to the moon, go back and look to the left. Find out where it could get to and where there's resistance. Well, we knew there was some resistance here about 180. It blew right through that one. We knew there was some resistance in this area here from about 175 to 180, 181. But let's keep going back. What we need to do when we're trading is to look and see what history. If we get into areas of free air, all-time highs, then we really don't have any built-in sellers. Okay, let's go over my longs of the week. ACH, Achieved Life Science Biotech, it's run up quite a bit. It has about 13-14% of the float short. It says tell me to go look at the weekly. Well, here's a huge spike here. I'm going to make a bet that 1735 to 1750 is going to get retested. And we're down at 1180. Will we pull back before that? Stochastic RSI tells me we might. On a daily basis, it says we may have already pulled back. Let me get a drawing tool here. We had to move up, and you notice how we broke out above this little area here, and above this area here we've stalled. But we had to move up, and now we're either doing a flag or a pennant if you want to make it that way. All right. So, Achieve is one that's going to be on my watch list. What I'm going to be looking for is a move up to about 12 and a half to make sure it's real. I'm going to watch the Stochastics RSI. Another one is ALEC, Elector, by another biotech. And I'm thinking that since we're up at this 1875 level, if we break out over that with about 7.5% of this float short, we're probably going to make a run for 21. We're going to try to fill that gap. Will it be a straight line? Probably not, but it sure might be. So I want to be on that board that one. Beyond. Now this is one that you got to be careful about. I don't need to have this 171 there. Oh, yes, I did. Because of this high volume spike. If we stay above 171, I believe we have an opportunity in Beyond Meat to pull back to this level and curl back up and retest this level around the 200 level and even the 220. Because we have a high enough short interest. So I would keep, that would be a speculative play on my part. Next one, again, high short interest, is Eli, Callaway Golf. Let me go ahead and look at the area chart. All-time highs. Don't need to work out anything to the left. So, all-time highs. Looks like we're trying to curl back up. Maybe 29 to 30 could be the first target there. Notice how we had a very, I'm going to call it a high wave doji, where we have a large wick at the very top and at the bottom. So this will be extremely volatile. And we're looking at 5% basic as the average true range during the day. So on this one, it's not for the faint of heart. And I'm looking for probably a break over 28 and a quarter and maybe a move up to 30 or even higher. EOLS, Evolus. It says look at the 1 hour chart, 18.5% of the float short. This high volume area right in here, spike of $8.75, I think is going to get retested. It's sure standing out there like a sore thumb. So any move over about $7, the first area was 7.5 and the other was 8.5 to 8.75. I still have Novavax on the list. Yes, it broke out here. It was one day's news. Could we consolidate and go sideways and then move up? Sure. I would love to actually see that. I would love to see us do one of these things for a couple of days and then start to move up. Then you could put your stop somewhere under the consolidation. And you wouldn't have to try to guess as to where the stop is a long ways away. Now, it could actually just do a bit of a pullback and then start moving upwards. Both of those. Then you could go, you have to figure out when you're going to go long, and your stop is pretty close as well. So both of those are ones where I could go long with Novavax. And that would work. ODT. 25% of the float is short. Yep, I've got to look at this. ODT has a big gap between 24.5 and 33. We got up here and we're pulling back. Stochastics RSI says we're going to need a little more time. Well, what I'm going to do right here is I'm going to keep this on my watch list. It may not work this week. I'm not saying I'm going to pounce on it Monday or Tuesday of this week. May not be for a couple of weeks. It may pull back to this $22 to maybe even $21 level. Well, I'm going to watch and see when it curls back up. If it does a J hook, I'm going to be all over it like steak on you know what. And my first target would be the 24.5 level, and the second target would be 33. VSTO, nice good consolidation. What I wanted to point out is the next level out there is approximately this 38.5 level, because we have a gap between 30 and 38.5. So it's bumping up there. It's trying to eat through the supply every time it gets up here. But at some point, this puppy's going to break out, and it's going to make a run for 38.5. I'd like to participate in at least some of it. VXRT. About 34% of the float short did a nice J hook on Friday. It had a nice good move. Another biotech. Let's go look at the weekly since I told myself to do that. And this is where we got the move to the 855, and then we're probably going to move up to 16, which is almost a double. For VXRT, this will be speculative money because it moves 10% per day. It does have high volume, and they can come out with news that could kill it overnight. So don't put too much money in any of these high flyers. Wave Life Sciences, another biotech. Anything that move over about this $10.25 level. First checkpoint at 11, we're at the bottom of the gap, and then the top of the gap is 15. Again, what you'd like to do, at least what I would like to do, is I'd like to make sure that it goes up through this area, maybe even a retest back at 11, and zigzag higher towards the 15. And we may be able to be in and out a couple of times during that. And last one on the watch list is Yala. It is a fairly new company. It was probably also a purchase from a SPAC, Special Purpose Acquisition Company. It has still done fairly well. 17% of the float is short. It's at all-time highs. Anything over this, I'll call it 26.5 level. It could run some more with all that short interest. Well, let's go over to the shorts. I have quite a few shorts here. Quite a few. I think we've got what? 13? H.A. Gallagher. Arthur J. Gallagher was a short from last week, and it's still working. It's going to probably bounce around here at this 100. I would not be surprised if the market bounces, that it gets some sort of rally, and if it stays below this 117 level or so, I watch for at least a retest of this low, if not a move below that. We've been having some trouble in the credit card companies, Visa, MasterCard, American Express. This one is in the process of doing a zigzag lower. This is an inverted J hook. I'm looking for 110 and maybe even 100 on that one. Berry Plastics. It's already done 2 zigzags. Will it be able to do the third one? I'm not sure about that. Sometimes the first 2 moves are the best. You don't normally get in on the first one, but you could probably get the second one. I'd be very careful. I mean, if you go short on this one after a bounce to 51, watch it very carefully when it gets back down to the prior lows around 48.5. Make sure it breaks through there. If it starts to pause, you may want to exit. Citigroup, still working from the last week, and I think that it goes down to the $55 level and maybe lower. CVX, I think, is going down to the 83.75-ish level, and maybe a little bit of a bounce there. So if we're not short yet, may want to, let's get this marker here. let's just say, let's hope that we get a little bit of a bounce here and then a move to here. That could be our first checkpoint. And then our ultimate target would be the bottom here, a little under 80, probably 78 or so at the top of the gap. This gap is acting like a magnet. I'm going to show you the Dow. Where I found some of these was I just went through the Dow. I saw the Dow, the DIA, that was pretty weak. I go up here on TC 2000 and open the components, and I walk through here. It gave me 3 of my shorts for the week. Pfizer was on the list for a short last week. It's still working. I think it bounced back up to kind of the short level. We got target 1 when we hit to 200, and now I'm looking for the possibility of it going down to at least 100 and maybe a bit lower. Goldman Sachs, it has made a move lower. Let's do this. Let's go up here, create a parallel line. And we basically made our move right here. And if we do a 1-to-1 move lower, and I create another parallel line from that one, if we can make a bounce right here, we could go down to 250, which is about where this level over here is telling me we would like to go. So I'm of the persuasion that if we can get a good bounce, we can get a good risk to reward ratio, a good stop level that's not too far away, I can see a short in Goldman Sachs coming. And remember, I believe we're going to bounce this week, very, very soon. Merck, I think Merck is going down here to the $75 level. I'd like to see a bounce first, because right now you would have to put your stop pretty tight here, and with the average shoe range here, we could get stopped out fairly easily. Now, this was news that these guys were trying to develop a vaccine for COVID-19, and they basically backed out on it. It wasn't doing very well. TransUnion, don't know why, but they're not doing well. We went short last week. We hit our first target of the 200. The ultimate target would be down here around 80, but we could get a bounce above that first. Let's keep an eye on it. If you noticed, a lot of stuff that I put on my watch list is not immediate buys or immediate sells. They're not immediate trades. They're to put on a watch list. United Health came down here to the 330 level once it gapped down and broke down, let's see, Wednesday. It seems to be trying to hold here at this 330 level. Personally, I'd like for United Health to hold, because I've got some leaps in here, at least my wife does, and I'd like for it to turn around. However, right now, if we break this 3330 level, it's going down to the 200. Just like American Express and American Excuse, Visa is weak, and I think it wants to come on back down to 180. A bit surprised. We could get another bounce. If we get a bounce up to 200 and then a rollover, that'd be a sweet short. Last one on the list here is Wally World. Walmart gapped down lower on Friday, kept going lower and closed near the low of the day. I'd love to see a bounce back up to this 143-ish level and then a rollover, and our target would be somewhere around the 138.5. All right, I think I've lift something out of here. Okay, these were the trade idea results from the 24th of January. This, you could go back to the video if you want to watch it, but from my buy or sell points, from a buy point, Alec went up 7.5% and we took profit. CNX long stopped out at minus 3.2%. Cabot Oil and Gas stopped out at 2%. FRC and Katos and Plug and SM, those dashed lines mean there was no trade or it's a push. Macy's 24%, Novavax 58%, ODT 17%, PLTR 24, Root plus 22, Run minus 13, but really we made money the week before. It just didn't follow through. That move is over. Shack plus 8, SKT plus 37, push on SM, and Wave minus 4, but it's still on the list. How'd we do on our shorts? We had 9 shorts listed, 8 of them were winners, 1 push. AJ Gallagher 3.5%, but we're still looking at it. Barry plus 5.5, still looking at it. Dun and Bradstreet out at 5.7. Fiserv out at 3.6. Lulu 5.2. True plus 2, it's still on the list. Visa plus 3.2, still on the list. VRSK out at 4.8. Go back and look at the charts, and you'll see that it's not rocket science. We just put out a few ideas. Some are going to be winners, some are going to be losers, but follow your plan. And a lot of people say, well, you took a lot of 2, 3, and 4 percenters. Yeah, but that adds up, especially when you're talking. This is 2% of stock price, 3% of stock price, 5% of stock price. What happens if we're using options? You multiply them. You multiply them by at least double, maybe triple or quadruple. So these are nothing to sneeze at. Grab a couple of $100 a day on each one of these trades, and you might get a 58% winner. That's gonna offset a lot of these losers. Okay, I said we would get into some specials for you. If you are not a member of Hit and Run Candlesticks or Right Way Options, you have a deal. You can sign up for either one of these for 30 days for only $49. I would appreciate if you would use these links here, because I get a few brownie points if you use them. And give it a try. We're doing quite well, even with the markets being as weird and strange as you could see from last week. Live trading alerts. You can get a 14-day free trial. Again, use this Top Gun Trading link here, and you'll get a 14-day free trial. It is a professional level scanning and alerting technology, but it's priced for the retail trader. You can scan the market or your universe, which you have whatever set of stocks you like to use. I like to use the high option volumes for every week off the CBOE exchange. And you can set up, and Ed Carter, the King Daddy Rabbit of this and the inventor, he'll help you set up to find the trade setups that are exactly what you are looking for at exactly the right time. No more guessing, no more trying to rummage around and find these. This will help do all the legwork for you. And finally, if you want to do any one-on-one coaching or give me a call, we get a free consultation. Follow this link, or go over and you can text me or call me, and we'll give a no obligation free consultation. If you want to follow me on StockTwits, again on YouTube, or if you do an email, topguntrading2@gmail.com. All right, I want to say thank you very much for joining me today, and I want to say be careful. The market is really wacky out there. If it runs against you, step aside. If you want to just stay on the sidelines for a while here and let the dust settle, I can understand that. But come join us. I think you'll learn a lot about how to trade wacky markets as well. All right, you guys take care. We'll see you next week.